Okay, welcome to Cyber Bulls, everyone. So just in the last week, Elon Musk has been saying more and more things that are very bullish for Tesla. First, in an interview at the All-In Summit, Elon said that he's now more confident in Tesla's own Dojo supercomputer. And with Tesla announcing the robotaxi event scheduled for October 10th at Los Angeles, Elon has come out saying he believes this will be the most significant moment for Tesla since the unveiling of the Model 3. In the meantime, there's been one headline after another showing how badly the other automakers are faring. We'll show you that list. So we've got the Bulls here with us today. I'm Herbert Ong.
I'm Alexandra.
James from InvestAnswers.
I'm Jeff Lutz.
Xander Sky.
Fantastic. So lots of things happening. I will play those clips where you can actually hear Elon himself being a little bit more bullish about Dojo, the bot, and of course, what he said about the upcoming robotaxi event. Let's start off with you, James. Do you think that things are different now? Is he being a lot more bullish recently?
I think he's comforted in the fact that they were able to get the big AI installation up and running in a very short window of time. Stuff is coming together at Giga Texas. You've got Giga China working at scale. And now he's got line of sight to the robotaxi event and FSD being solved. So it's been a long haul to get to this stage. I think now we're here. But for me, of course, Elon always has an optimistic outlook at the company. What takes me aback is how the industry analysts are waking up and they are increasingly acknowledging that, the value in Tesla lies in its AI innovations rather than its identity as a traditional car manufacturer. And this shift in perception highlights Tesla's position as a technology leader. And now they're seeing the power of autonomous driving. Maybe some of these analysts even have it. We have some experts, actually, by the way, that don't even own Teslas or have FSD, which I find so comical, but they are somehow empowered to make judgment on the company. But anyway, I think it's been a huge tipping point. And now you have Deutsche Bank, that was a super bear. They whipped out their analyst, put in a new guy in, Mr. Yu, I think it is, Edison Yu, and he's brilliant. And he broke down a valuation model the proper way. So we're seeing a lot of stuff change right now. And now the most important thing, and what Alexander's been talking about, when will Tesla be reclassified as a category unto itself or as a technology SaaS software company? That's the really interesting time that comes ahead.
The company and the product. I don't look at the quarterly stock movement.
A very realistic bull, questioning certain decisions.
The rational bull. I enjoy listening to bears.
Looking for the red flags. You're supposed to react.
Industries that are ripe for disruption, and then invest hard.
So today what we'll cover is these topics. Elon Musk bullish. I'll play some clips of what he's been saying recently. We're going to go through a list of recent headlines that kind of show the competition is struggling more and more. We're going to talk about the hybrids. This is one way the competition is trying to get back into the game. Is Elon overloaded? He's been just busy with politics. He's been busy with the SpaceX and others. And then, of course, the Invites 1010 has come out. So I'm going to go ahead and play a clip of Elon and Dojo, and then we'll have you, Jeff, respond to that.
And then have that inference done on a tiny computer, relatively speaking, a small, like a few hundred watts. It's a Tesla-designed AI inference computer, which is, by the way, still the best. There isn't a better thing we could buy from suppliers. So the Tesla-designed AI inference computer that's in the cars is better than anything we could buy from any supplier. Just by the way, that's kind of a.
Oh, by the way,
the Tesla AI chip team is extremely good.
Well, you guys in the design, there was a technical paper and there was a deck that somebody on your team from Tesla published, and it was stunning to me. You designed your own transport control layer over Ethernet. You were like, Ethernet's not good enough for us.
Yeah.
So you had this COE or something, and you're like, we're just going to reinvent Ethernet and string these chips. It's pretty incredible stuff that's happening over there.
Yeah. No, the team, the Tesla chip design team is extremely good.
But is there a world where, for example, other people over time that need, some sort of video use case or image use case could theoretically, you'd say, why not? I have some extra cycles over here, so. It should kind of make you a competitor of NVIDIA. It's not intentionally per se, but.
Yeah, I mean, there's training and inference, and we do have those two projects at Tesla. We've got Dojo, which is the training computer, and then our inference chip, which is in every car, inference computer. So, and Dojo, we've only had Dojo 1. Dojo 2 is, we should have Dojo 2 in volume towards the end of next year. And that will be, we think, sort of comparable to sort of a B200 type system, a training system. So I guess there's some potential for that to be used as a service. Dojo is just kind of like, I mean, I guess I have like some improved confidence in Dojo, but I think we won't really know how good Dojo is until probably version 3. Like, it usually takes 3 major iterations on a technology for it to be excellent, and we'll only have the 2nd major iteration next year. The 3rd iteration, I don't know, maybe late, 26 or something like that.
All right, so he said that he's got some improved confidence in Dojo, but we won't know until version 3, which is a while away. So he's still playing it a little, not being overly bullish, but it's a lot better than what he has been saying, right, Jeff?
Yeah. I mean, if you think of this objectively and you think about building AI computers, you think about power efficiency, you think about, the accuracy, model performance, you think about latency, you think about throughput, you think about all these objective measures, memory usage, cost per token or cost per inference. These are some of the metrics that are looked at, and I can guarantee you that Tesla is baselining this and has a really good grasp of what they have on the inference side. And there's still a big debate in the industry in terms of how much work or load is going to happen on the inference side versus on the training side. On the training side, there is a clear king of the hill, nobody's close, hardware, software, the entire system, NVIDIA, and they're only growing the size of that system and span of that system with Blackwell. That's ramping right now. But as Tesla talks about, again, every Tesla having this inference computer and the workload that's being done on that, and then ramping up and building Dojo, and James mentioned the clusters that have already been built and are being brought up, Colossus and then the other one in Tennessee with XAI, and I get the names mixed, but 2 of the largest data centers known. And when you look at where Tesla may be, and Elon talks about Dojo 2, so Blackwell is being released, later this quarter, and Elon talks about catching up to that, next year. So there's still a gap, but they're meaningfully closing that gap, and there may be a year behind, but then NVIDIA is moving on to the next thing. So it's not so much about, are they going to pass NVIDIA or is that going to happen at some point? I don't know if that's a realistic thing on the training side to even think about right now, but there's really, honestly, there's very little, in terms of market share from a number 2 or number 3 perspective. And there's a lot of room for competition in this space. And given the size of compute demands, Larry Ellison spoke about this publicly in the last week, that these frontier models are going to need $100 billion plus investments. Right now we're only in the $5 to $10 billion range, and going over that with Tesla and some of the other providers. He's talking about $100 billion plus for all these major hyperscalers. It just shows you how much growth there is in this space. And Tesla, again, arguably has the best inference solution. If you think about the number of devices from any product, from any company that are out in the wild and in consumer use, and how many actual inference applications they're actually processing, I don't know, it'd be hard. That's, vision in, images in and controls out in Tesla vehicles. I'd be arguable to say, like, who's actually doing more of this load. I think it's Tesla. And they're certainly up there and should certainly be thought of as one of the top. So very appropriate. I think people are sleeping on this in terms of Tesla's value in the future. At the same time, if you look at the valuation, if you look at where it's trading, it's also trading at a generous level too. So I don't think people are completely sleeping on it per se, but there's certainly more to this story than what Elise has talked about publicly with Tesla.
Yeah, thanks, Jeff. So Dojo is coming soon, next year, Dojo version 2. So the other thing that happened, I'll ask you this, Alexandra, is what the announcement of the 10/10 event that's coming. This is Omar saying 10/10, October 10th, will be the most significant moment for Tesla since the unveil of the Model 3. And Elon replied and said, in my opinion, yes. How did you interpret this reaction by Elon?
I mean, we've all been waiting for this. It should have been 8/8. It is 10/10, which is no problem at all. But obviously, the expectations are high. I'm still sort of doubtful that they can actually fill all these expectations. People seem to expect something really grand in this Warner Brothers Burbank setting. Then we heard from IR Travis Axelrod, that there will be very, very limited space. So not sure, how this is all going to take place, because I imagine the studio being quite large, that a lot of people could come, and it's not. So what are they showing that makes it that only few people can access, and how is it going to be transmitted? How are people going to participate? Are they going to try the app? Will there be robotaxis that can be tested? I mean, it is just so much is possible and so little information we have. And Elon is certainly helping to hype it. There is no doubt about it.
Well, he's helping to hype it, but he wouldn't do that if he wasn't that confident.
Sure.
Yeah. So let's get you, Xander. What's your thoughts in terms of like this event being hyped this much? Is this what's gonna happen to the stock? What's your impression of what's happening?
I wouldn't say it's hyped that much, because we haven't had, any talkings about it since they moved it to 10/10. Just a couple of days ago, we got confirmation that it will be on 10/10, which is very, very good. I'm very excited by what will be. I'm not over, like my expectations aren't that we're going to get everything that everyone wants. I just think simply we're going to see a robo-taxi demonstration if it's a Warner Brothers lot. We're going to see people, intersections. You're going to see how a car handles those conditions autonomously. We'll see an app. I think we'll see a car that won't have a steering wheel and pedals. And, we talked about this, that they won't want to Osborne, so they're not going to show anything more. I'm hoping for one more thing, but I think this is just, par for the course. I don't think anything is being overhyped. Elon is, as you saw in the video, very measured in his responses. I think that they're just moving along on their goals, and as things, like I just saw a video from the limiting factor. Jordan posted about like the 4680 and how that's evolving. Like, I just think that they're moving along what they're trying to do. Perhaps it's delayed, but nevertheless, it's all going in the right direction, and I'm excited to see what they present. And will there be will there be information that the Wall Street analysts can model into their spreadsheets? I think that is the most important question, because I'm waiting for earnings per share to start reflecting some of this innovation that has been created.
Okay, well, listen, you saw Elon just confirm. He said this, in his opinion, this event is going to be the most important moment in Tesla's history.
So it's hyped, right?
It's hyped. He himself is hyping it. But my point, Alexandra, is that it's not going to be this, limited kind of presentation. Maybe he's going to have many other invites to dignitaries, to media, to celebrities.
Tesla. Elon's not going to bring Kim Kardashian. Come on, no. I think Elon loves his shareholders so much more than all of that fancy schmancy world. So no, but why is space extremely limited? I mean, I don't have no answer, but I don't understand. Why would space be extremely limited if you're renting this
I
whole
have an idea.
Tell me.
Yeah. One idea could be that the way that this is important to succeed, right? They need to show the demo, and maybe they have 10. It's October 10th. They need to have 10 robotaxis. And so they have a small group of people that should be able to hail the robotaxi and be driven around the city, like take me to the movie theater, take me to the pharmacy, take me to this, to the full house. That could be one reason.
Yeah, I think they're definitely going to have demos. But I think it's important for Tesla to clarify, in terms of expectations, what is inbounds, what isn't. For example, I've heard analysts on TV saying they're not going to have any robotaxi ready to ship. Well, no kidding. He's publicly said that car's not available to build, until middle part of next year. But I think the surprise may be on the business model side. And again, I think it may be the surprise may be on a Tesla network being announced. And when is that Tesla? I think the Tesla network would start in advance of Tesla robotaxis being ready. My prediction. We don't all agree, but I think
we
if
all
analysts
agree
heard,
except Herbert.
We don't all agree except we all agree
except Herbert.
Except Herbert. But if analysts walk away that Tesla has an Uber-like service that is where the car drives itself, where the driver's not as tired, and then meaning they could drive more, and eventually there's this path to autonomy, all of a sudden it's a very simple thing for them to walk out of the event with. Tesla is Uber-like. Tesla is Uber-like. There may or may not be a partnership. Who knows what happens? It's been interesting how Uber's stacked all these different partnerships without any evidence of any real progress leading up into this event. But all analysts need to leave with is that there's some semblance of a business model here of Uber, Lyft, Diddy, all the different major ride-sharing platforms on Earth, and that they're launching one. But the one that they're launching has a path to having a cost per ride that's much lower than anybody else that's doing that today.
Any comments? Yeah. James? Yeah.
Okay. It's clear. Well, I heard a very interesting statistic. I can't remember where I heard it from, but it was yesterday or the day before. It was how the original taxi medallion companies, the people that owned the medallions, took 70% of the take and left crumbs for the rest. So it's just an example of how everything is going to flip so much the other way. And people, again, don't know what's coming. The question is, how fast will it come? That's the only thing that we can't answer right now. But I think Jeff is dead right. Reading the tea leaves, something's up with Uber, and Travis is nervous, or whoever is running Uber now. I don't know.
Yeah, no, okay. So they're not. Uber's not gonna. They're not gonna announce a partnership with Uber. If it was gonna be announced, if that was gonna be announced, there's no way Tesla would have allowed Uber to start announcing partnerships with this, with BYD, with Cruise, there was every single week they've been announcing partnerships. They're not going to go, oh, they're just announcing the one with Tesla.
I think we've said many times on this channel too, Tesla don't need Uber.
Tesla don't need Uber.
Yeah,
okay.
Yeah, I agree with that. But if the remember, this needs to be in large crayon, like large font things for some folks to be able to take away. And if Tesla is turning into a sum of the parts business. They have autonomy, they have supercharging, they have insurance, they have a vehicle business that's the only profitable EV business. And now all of a sudden, if there is a ride sharing business that emerges, it deeply enriches the valuation of the company.
Yeah, I saw Gary Black post something about the valuation and being at 100 PE, and that hasn't happened since like 2022 or something, in the 350s. And I thought how, if we continue to focus on what is the present value of Tesla and what does that look like in 12 months with those valuations being increased once they start delivering earnings, right? Like if it's a growth company, but you're comparing it to a flat old legacy automotive 7 PE type of business. Like, I just think that that is not the right comparison. So, you know, I just look forward to getting out of this economy and moving forward to where, like, I think recession risk is such a huge thing to discuss when you're comparing Tesla to the rest of the market or looking at the PE of Tesla. So I find it silly to do that. Yeah, go ahead.
Yeah. All you have to do is look at the historical stock price versus PE, and what you will find is it is a complete random number generator. So for those that think that they can open the phone book and sort stocks by their PE and say this is where Tesla should be, analysts don't know how to value. It's a difficult business to value because of all the different businesses that they're in. Okay. And let me give you a stat. In 2021, when Tesla was at its all-time high, it traded at a 255 forward PE at one point. So this, you know, if you want to get hyperbolic about 100 PE, you would have missed the next 150 PE run-up on the stock. And it had nowhere near the product portfolio or amount of sales that it does now. Now, it had forward growth on it that's at much greater levels than now, but Tesla is telling you that they're going to do 2.7 million in production next year. So at least the hardware growth is back, but they're also telling you that they're going to change their business model and they're moving more towards software and services as the business model. So if I think PE is part of the equation of how you value a company, but if you make it everything, you're going to lose. You're going to miss out on this one in both directions. I'm not prognosticating. I'm just telling you PE is not an accurate measure for this company.
And in fairness, I think we should all just have a moment of silence for Gary Black, because he did sell the bottom back in March and around $150. So, pardon?
Not
Alexandra?
me.
And no moment of silence from you. No, but I think Jeff adds it up. Like, you ask anybody, we've discussed this as well on this channel. It's all about free cash flow. Go back and look at the Amazon case study way back when. That's what people like Jeff Bezos mentioned. But if Wall Street analysts wait for their little spreadsheets to be automatically filled with earnings every quarter, by that time you completely missed the boat. It's illogical.
And if they still don't see that Elon is the best capital allocator there is in the whole world, if they don't see that, and if they are still stuck on their old ratios and on their spreadsheets, I'm not going to put even a second of silence now. Sorry about that.
And where else can you find a business that leads across 8 massive categories that embrace 4 S-curves colliding? It doesn't exist. It doesn't exist.
Yeah, but it doesn't fit in the spreadsheet, James. It doesn't fit in the spreadsheet.
Or the category too. In fact, just breaking news. There was a release, because we talked about this at the beginning earlier. There's talk now on Yahoo Finance where there's confusion over how to categorize. I think it's Edison, you brought this up. He said, at the core, we do not see Tesla as an automaker, but rather a technology platform, attempting to reshape multiple industries. That guy gets it.
And then keep reading the sentence. That requires a whole new way of valuation.
Exactly.
No more old style spreadsheet.
Deserving of a unique valuation framework. Exactly. And
guess who has that valuation framework? James has it.
Yeah, well, also,
he's been working on it for years.
And guess who hasn't?
Well, how big is the TAM of FSD? How big is the TAM of robots? Like,
you can't measure it.
You can't measure it. We don't know. Yeah, we just don't have enough information to even try to compute that. You can infer, you can make a guess, but nobody has that information yet. So, like,
But Tesla bulls are nasty. But.
You know, it is possible. It is possible that I think the takeaway here is you really need to build a custom model to understand and evaluate the company, and you need to think differently. And we may all be wrong, or we may all be off on at various levels or percentages, but you can't just look at a traditional PE metric and say, this is it, it's too much, it's too little, without looking forward, without understanding the product portfolio, without understanding what the company's doing. And without understanding too that you're taking significant risk, because what the company is going after, they're going after things that have never been accomplished before by another company. And when you're doing that, and when you do that on multiple levels, you do it on multiple different things, your risk is magnified.
Exactly.
But
Completely
this company
agree.
also has a history of executing on things that haven't been done by others before. So that's the risk. That's the risk curve you're on. That's what you're on right now.
And I agree. And we're taking a risk, but we're at least consciously taking the risk, saying we can't plot it all, so we're just gonna believe it and have big lines that we sort of break down in a simple manner and see it out there. But the people putting it into spreadsheets and then balancing themselves in a security that they have figured it out are actually at least as much wrong as we might be, because on top of it they have this feeling of, oh, I've got this plotted line, it's all wonderful and linear, and that's how it's going to work, and I have my earnings per share in 3 years. It's just not going to work like that. It's not. And it gives you this false security of having a full spreadsheet, yet it doesn't matter. There's nothing in it that you can really predict. So that one was my nasty moment of the week. I'm fine again.
That's okay. Well, I'm going to wrap up this topic, but I just want to go back to what he said, because when I read this, it seems very positive to me, right? 1010 will be the most significant moment for Tesla since the unveil of the Model 3. And he says, in my opinion, yes. So the most significant moment. Now, the unveil of the Model 3 was, at this point, the most significant moment for Tesla, because what it did was it changed Tesla from a company that was kind of like selling niche products to going mass market. This was Tesla going, we are mass market. This was also Tesla going, we are now going to be very, very profitable. If you look at the free cash flow, James, you track that so quickly, that thing skyrocketed after the Model 3. It took a little bit and then all of a sudden just skyrocketed. So when he says this is the most, in my opinion, it is the most significant moment for Tesla, I look at that as him realizing this is a moment in history that's going to change the world.
Yes.
Not what some people might say, oh, it's like make or break. This company's going to be make or break. No, because if it was make or break, it's not a moment. It could be a year from now when FSC is finally solved, maybe 2 years from now. It's not this one moment that's going to make or break the company here. That's why when you see him say, this is the most significant moment for Tesla, he's looking at it as in saying, this is going to be marked in history as a time that the world has changed, when we revealed something to you that you're going to be shocked with. Am I overreading that, or is that right?
Yeah, I'll hop in there. I think that you are completely correct. Omar is making a grand statement. Elon found it worthy enough of a response that he's willing to be held to. If you think about, I just did a talk, 2-hour talk, it's really long, with Peggy on his channel, and one of the topics we discussed is exactly this. Like, you have this 2019 moment where you acquired a lot of investors, including myself. I found Tesla in 2019 when the company was de-risked because they built tents and they made the Model 3 ramp successfully. It took extreme measures, but they did it. And that execution is what gave me pause to analyze the company and the jockey that is causing this to happen. So if this moment where you have this unlock of software as a service in the business, right? Like the business model, what Jeff was saying, what we're all saying, it's important to look at what does it mean, right? Analyzing Amazon moments, or that moment when Amazon became a different beast than what you thought it was. That's why I think that it is a huge moment in time, where how we get around and what this technology unlocks, if you think about robots and autonomous robots, like what's after that? Like you can take the next step and the next step, and they have put it all together. They have the insurance. They're going to have to take liability, and they are positioning themselves for this new book. And if you just look at the breadcrumbs, Tesla thinks that they have got it, and now they're going to show us. I just, I think that I'm not being misled as an investor, and I remain bullish.
Yeah, I think another very place where you can get some confidence, and in terms of a proof point, is the Rivian Volkswagen deal for software that runs your Bluetooth and whatever else. I mean, can you imagine if that's worth $5 billion? Of course, Volkswagen will never be able to pay for it, but can you imagine what FSD is worth to the 3 OEMs that are in negotiations right now? And that's straight to the bottom line.
Why did you say 3?
Because there are 3 OEMs apparently in discussion with Tesla about FSD.
Oh, do we know that?
Yes, Elon leaked it on the earnings call. Somebody else must have heard
3.
it.
Okay, no, I didn't.
Yeah.
I knew it was 1 or 2, but I didn't realize 3.
Yeah,
Okay.
I heard 3
It's
more.
It's more than 1. Yeah, I don't know if you said the exact number. I will take the other side of this, and all I will say is Tesla has technology right now in their vehicles that should be, in Elon, like it should be like, stunning the world in terms of some of the things that they're able to do just with turn by turn. There's no other car that can ubiquitously just be dropped anywhere in North America and do what it does. And the markets, again, arguably haven't, it's been, the performance of that software is greatly improved, and the stock has been flat for 4 years. So I would just take the other side of that and just say, like, sometimes the market won't respond even to very overt, clear signs of technological capability advancement and future earnings potential, even though it's laid out right in front of them. So I will take the other side of this event. I'm not saying it's a sell the news thing. I'm not saying that at all. I don't know. But what I am saying is, in the past, there are things that Tesla believed that should be stunning the world. And quite frankly, if you're into the tech, it really does. But then the markets, and then sometimes investors don't respond as such.
I want to push back. I just think that this is one of the things why I learned options. Understanding that there are forces that are bigger than what we see and what's in front of you. Like there's a lot of money that is either made or lost by hedge funds, and it doesn't matter if this is the Wall Street type. If your earnings per share is lower than what Wall Street thinks, if you're going to, this is where Gary Black has to get some credit. They discounted the vehicles, the gross margin went down. That is a fair thing to happen. The market thinks that the company is worth what it's worth. Jeff, I don't think is taking the opposite view in actuality. He's just pointing out that you have a company that you have a disconnect between what the share price is and what the potential share price in a year or 2 or 5 is. And I think that that's the important thing to realize, that this is where alpha is created, is in these dislocations from what the market thinks and what reality is. And you do that by having an amazing product and testing it and getting your hands on with it. Like all the bears that are talking about the FSD, but they've never been in a ride or have seen the evolution of it. They're not seeing the path to solving autonomy. We are, but anyway, moving on.
Okay. Anybody want to comment on that, or should we move on? Okay. So next topic. Thank you so much, Xander. Absolutely. It's the big topic. Everybody wants to know what's going on with the stock and the disconnect. So you guys have a good job explaining that. So what we're going to do is, at the same time, in the last couple of weeks, we've seen a number of headlines. I'm going to go through the list here. It's not complete, just a few, to paint you the picture of what's actually been happening with the other automakers. We'll talk about their hybrids that they're now hyping up. and then we'll go through the other topics. So some of the headlines, Volkswagen came out and they started to, in a big company presentation with thousands of employees, they had to tell them that we are losing money, we have to cut a couple plants, we have to let go of some employees, and we have to even let go of our pension. They're reportedly paying staff to leave because they need to cut 10 billion euros. You got companies like Kia, they're actually trying to add additional incentives. In this case, they're trying to do this to get you to buy. If you own a Tesla, they want you to consider leaving Tesla to buy a Kia. Another stat here, a third of Europe's major car plants are at half capacity. So if you look at this, anything that's a reddish that's not in the green area, that means that their utilization rate is under 50%. You can see quite a number of them. And then even a number of them are light green, which means that there's barely above the 50% mark. So they are all at the point, many of them are now starting to wonder what they're going to do with these plants. It's a sign that they are heading downwards. This is the existing leaderboard as of the second quarter of 2024, looking back for a year's worth. And you can see here that last 4 quarters, this is, 23 electric vehicles globally. You got Tesla, number 1, BYD, number 2. Then you got Volkswagen, BMW, and Geely. But if you look at their actual financials, they are falling down and they're having significant struggles. This is a really nice chart to say that these two alone make up almost, if you add up all the rest together, it really is a runaway between Tesla and BYD. So what are you guys thinking about the recent headlines on the competition recently?
I can maybe take this. I have a friend who didn't want to do this publicly, but who sent me a study he prepared on 11 OEMs and their CEOs and when the contracts of these CEOs expire. So Mary Barra is in there, hers expires in 2026, Jim Farley is in 2027, Oliver Zipse from BMW 2027, Kalenius from Mercedes is the only one that's really longer, 2029, Oliver Blume from Volkswagen is 2027, Toshiro Mibe from Honda is 2026, Koyo Sato from Toyota 2026, Luca De Meo from Renault 2025, Martin Lundstedt from Volvo 2026, and Dong Seok Lee from Hyundai 2027. So we have one of the 11 that's 2025, and then the bulk, 9 of them is between 26 and 27. And so I just feel that they have the typical strategy of an aging industry trying to cover their backsides until their contracts are renewed, not promising anything that needs to be accounted for, that they need to be accountable for before their contract renews. And their options are linked to these packages. And so for me, it's no surprise once I saw this study that the push out now in 2024 is again 3 years. Remember, we had this first vague in 2020, 2021, where they said, oh, by 2024 and 2025, we'll be there and there and there. Don't even remember how many models GM was supposed to have in all colors and forms and shapes. So obviously that's all gone. And so now the new trend is to push it out again another 3 years. 3 years is a very strategical measure because it allows you to be a little bit forgotten, right? It's long enough to not be in the short-term calculations and accountability, but it's not too long. So that hope still filters through some EPS statistics and whatever. And like I said, surprise, surprise, after their contracts are going to be renewed. So I just don't think this is all a coincidence. They can't do it profitably. They don't want to do it. They want to make sure their contracts get renewed, that they don't get held accountable for it, and just pushing it out. What is more surprising to me, and we had that this morning, is that some of them are forming alliances. And I thought, Herbert, you had a very good theory on that, and maybe you can explain that here on the channel as well, because it annoys me that these people are even trying to play games by partnering up, but you had a good theory on that.
Yeah, thank you. Yeah, so this morning we had news that Volkswagen is partnering with Hyundai, and it's like a global
GM,
agreement.
no? Wasn't it GM? GM,
No.
Volkswagen? It was, yeah.
Oh, sorry, you're right. GM is partnering with Hyundai, and it's global, and it's just a memorandum of understanding. But it's everything from powertrains and engines and supply chain and both electric vehicles and hydrogen. And why are they partnering with Hyundai? Well, what typically happens in this scenarios is companies who are legacy, the big dogs in a particular industry, they'll first come out and say, we're going to do it ourselves. We're going to be the leader. And there, whatever, there's a revolution, a change in some sort of new technology. Then when that inevitably starts to fail, what they'll then do is announce coalitions. We're all going to work together. We got this coalition. We're going to work together, partners. When that starts to falter and fail, what happens next is they will then partner with another company. Typically, they'll choose a low-cost provider, in this case, Asian automakers. And we started seeing that, right? Across the board. Almost all of the American and European car companies have partnered with some Chinese automaker as they try to implement it in China, and then now even going to go globally. And that's what you're seeing here. When that eventually fails, what you're going to see is Tesla is going to be finally, the leader in the space, the low-cost leader and the high-tech leader and the global leader. These companies will have to just, bite their tongue and just say kowtow and agree to partnership with Tesla because they have no choice. It's either at that point when they've exhausted all their choices, they either choose to die. Some of them don't care because what you just said, Alexandra, that was a fantastic stat that I did not know. I'm sure the audience didn't know. Many people, I think that's the first time you've actually shared it, is that knowing that these CEOs are managers and they're about to leave in 2 to 3 years, they're not as concerned about the brand dying, except for Ford. That's why we think Ford might be one that would do this because the family does not want to see the brand died. They might be willing to partner with Tesla.
Well, the famous term for all this is always resting investing is what we used to use back in the day where people, they have the line of sight to retirement or getting all of their comp package and then just don't rock the boat. Cruise to that milestone and take all the cash. And it's sad that companies do that. But what we're talking about here is when you have companies that find that they can't overcome the inertia of their own business, then it's time for them it's like they're drowning in the ocean and they reach over for another plank of wood to try stay above water. And that's exactly what we're seeing right now.
Yeah, you shared a slide that showed Kia and it made me think of isn't Tesla the best repeat customer satisfaction, whatever that statistic is. This slide made me think of is that the woke mind virus special? No. If you just can't, you just hate Tesla and Elon so much that you're actually willing to take this. Well, who's gonna go for this? If once you drive a Tesla, you do not it's such a superior product. The software works. You get over-the-air software updates. Yes, there's occasionally paint or whatever that's that's an issue or gaps or whatever they had in their growing pains. I think that ultimately it comes down to what Alexandra said. If you can't make a profit doing this, you're gonna try every tactic in the book. But ultimately, it's all about dollars and cents. If this isn't profitable, why are you pulling back? Or if it was profitable, why would you pull back goals when the market is clearly telling you that EVs are successful? It doesn't mean that every vehicle has to be an electric vehicle, but that is the direction that the consumer wants.
Okay, here's what happened. It'll take 1 minute, and then James has some stuff to go through. So the reason I'm not defending this, I would never sell my Tesla to get a Kia. The reason they're doing this is growth is stalled. All the automakers have switched. They're making hybrids, and they're bashing EVs in the media. That's fine. Growth has slowed down. I shouldn't say it's stalled. In the U.S., growth has slowed down. So what Kia's tacked here is Tesla has half the market share. So I'm going to go after Tesla customers because there's more market there to get potentially by spiffing them than the actual growth in EV that's currently happening. Right, wrong, or indifferent, that's what they're doing. Herbert, if you were to put up that chart you showed of the EV leaders and the bar chart, there's a reason that this chart looks the way it is, which is lopsided Tesla, and BYD. There was a transition that occurred in the auto industry. 80 million or so cars are made per year. EVs, for a number of years, have been inherently more expensive to build, and they are still more expensive to build for every other company, actually, besides Tesla and BYD. They are still more expensive to build. Why? Number one, there's 65 million units that are still being built on combustion engines. So that's a majority of the supply chain, a majority of the supply is still set up and capacitized for that. And these other companies haven't figured it out from a design perspective how to do it. But the reason that one of the many reasons why the Tesla bar and the BYD bar are where they are and the others are so much shorter is vertical integration. And the number of components, you think of BYD as batteries, but they do a tremendous amount of other electronic components. They build their own cameras. They do a number of different things that no other automaker can do. They build components that Tesla can't build, by the way. So from a unit economics perspective, we know the data is a little iffy in terms of like, are they truly profitable on EV? And that we know that they're competing in a completely different set of tiers than Tesla. But the reason that those two have been able to make that transition and be so much higher than the others is their approach to design. It's not only the supply chain, it's how they design a vehicle as well, where all those resources are under one roof. And then they're not paying a margin out to 65 different suppliers to bring those modules in and build it. So there's a reason why that is. And the question is back to Alexandra's 2 to 3 year kind of, these CEOs are walking around with a clock on their neck. These type of transitions actually take 3 to 5 years to do. If you wanted to say, I wanted to scrap the way my company does business, and I want to design a supply chain, and I want to design engineering resources to be able to do it just like Tesla and BYD, that takes a number of years to do that transition, and they may not all get there.
I've got a quick answer to you, Xander. Why would Kia want to pitch this proposal? If you own a Tesla, we'll give you $1,500 if you buy a Kia, if you already own a Tesla.
The offer is 9,000.
The incentive is actually 1,000 or 1,500, but they have an additional incentive for 7,500, so you can actually get that. But it's 1,000, 1,500 for if you own a Tesla or lease a Tesla. And the reason is Tesla is Coke, right? BYD is Pepsi. Then you have all these other brands out there, right? There are no-name brands. If you are a no-name brand, you're Pepsi. You want to always, in your marketing, associate yourself with Coke. You're the best. So here's Kia going out and saying, hey, we're willing to pay you $1,000 to try a Kia because we're just like Tesla. It's a marketing. This is not because they expect to have any sales at all from this at all. It's just positioning. So
do we even see Kia on this chart? I'll keep looking.
Yeah, they are. They are doing really well. Kia is Hyundai.
They're number 2 in the US.
Hyundai and Kia.
Kia is Hyundai?
Hyundai and Kia are partners, and they're one company. They're one company, but 2 divisions.
Okay. And then real quick, Jeff, you said BYD makes some kind of component that Tesla doesn't. Can you expand on that? I think that might be a question.
They're the number 2 cell manufacturer in the world. So Tesla does very few of their own battery cells, and BYD can do all of theirs. I'm sure they buy some as well. So battery manufacturing is the big one, battery module, cell and module, but they also do a ton of other electrical components and electromechanical components. So yeah, they've got a huge electronics assembly business. And if you think about wire harness, you think about other things that are inside of a vehicle, these are things that they can make themselves. So they get a big gold star on vertical integration because they can, and they have, and they built that up over a number of years. And those were decisions that they made as a management group to do. And they had a smartphone business in terms of building components for other smartphone suppliers in the world, the biggest too. The biggest companies in the world, they buy electrical components, and mechanical components from BYD. So they've leveraged that into the auto business.
Got it. Thank you.
James, you have more information on competition?
Yeah, a couple of slides. One I'd like to show because I'd like to pick Jeff's brain on it. There's a stunning statistic. I call this Chinese crushed ice, and how in a very short window of time, ICE vehicles in China in less than 5 years went from nearly 97% of the market to 46% of the market. And you have a lot of companies that were dependent on that market, that built to that market. And now, as we discovered earlier, there's a ton of excess capacity. Half of the factories are running at half of capacity. Before we get into the competition dying, I got a couple of slides on that. Jeff, can you talk about the pain a business has when they're only running at half of the installed capacity that they have?
Yeah. So when you're designing a factory, you design you design for utilization, and there's different ways of doing it. But you have a yearly calendar that you're looking at, and you say you're building a manufacturing line, and what you're trying to do is you're trying to have that line, that capital that's on that line, and then the labor you decide to bring in to scale for that line. You want it to be used as high a percentage of time as possible, but allowing enough time for maintenance and so forth, so you can keep the machines and keep people running in their best conditions. So what companies typically do is they design for greater than 80% utilization. That's their target. And that's where you can get your fixed cost absorption. So you put these machines in factories, you put people in factories. So you have capital efficiency and you have labor efficiency. And you want to keep that capital and that labor running at a certain percent, so you can absorb the cost of you putting that in and the depreciation that you will take over a number of years. So that floor is usually in the 70 to 80% range in terms of what quote unquote good utilization is. If you are running at 90, sometimes I see these articles from Reuters or something, Tesla has decided to drop the factory in Shanghai below 95% utilization. When you're running that high, you're on the other side of the risk pendulum, which is you could have something catastrophic happen. So that's what companies typically do. It allows for a variation in material lumpiness and inflow of parts coming into the factory. It allows you to take the national holidays. It allows you to have, if there's some sort of technical issue with the line, they usually design on a yearly calendar basis for 46 to 49 weeks on a 52-week calendar utilization. And then you have multiple lines where then if you have to take one down, you can move people over and you have that. But at an aggregate level in the factory, you're trying to drive greater than 80% utilization.
But the financial pain when they're not at that, when they're at 50%, all that amortization, all the labor, all the overhead, it must be extreme, and it drives.
It's a math equation, and it's huge.
Yeah,
it's a math equation. You've spent millions, in some cases billions of dollars in capex, and you're dividing by the number of units that come out of that operation. So if you're dividing by a much smaller number of units, your cost for capital and your cost for labor will be a much higher number. That's simple math.
Yeah. So what I'm trying to get to here is the competition. The way I kind of frame it up, I look at all the headlines, like BYD is hitting the wall in terms of sales. You got Geely, ultra low profitability. You got all the models that BYD has, 2 versus 18 for pretty much the same. And Tesla does 3x the revenue from these things. You got Volkswagen biting the dust. We know all about that. We spoke about it. Got Volkswagen, huge deferred liabilities, these pension things. You showed something, Herbert, about, hey, we'll give you $550,000 if you leave now. I'll go join Volkswagen for a week and then leave. Getting worse. Then you got BMW and Volkswagen. The slump is like no other that they've never seen in their industrial life. And you got BMW also planning to scrap future guidance because they are terrified. They can no longer estimate their free cash flow anymore, which is critical. And then Stellantis just popped up today, halts production of their Fiat 500 due to poor or no demand. And Honda also slashing jobs. It's not just European car makers, Japanese ones too, and they're shutting down their Chinese plants. And then Lucid plan to come out. This is the funniest one of all. They plan to come out with a Model Y competitor that'll cost $50,000 in late 2026, which means maybe 2027, 2028. And by that time, Tesla will be kicking out Model Ys for under 25K. So they're going to be 5 years late, 25K short, and that's ludicrous. I mean, the competition are flailing out there, and that's what I see as being a very extreme situation right now, with all the competition. So as I told the story at the beginning, it's like the goalposts, the competition can no longer make BEVs. They can't figure out, they can't crack the code on that. So they're going back to hybrids. They're moving the goalpost back into another pitch, whereas Tesla in a year or so will be 10 pitches ahead with autonomy. And it's just either in my mind, I am too much of a hopium person, or is everything falling apart really fast for the competition? I just see the house falling like a house of cards. Thoughts? Anybody?
Well, we're never talking
yeah.
about Toyota. Sorry about that, Jeff. Go ahead.
No, go ahead. No, please go ahead.
I said we're always never talking about Toyota. Was always, the industry standard. And the other market that's really important is all these OEMs invested heavily in China. And in China, it's just crumbling now. There is nothing what they've put in place in China that's going to materialize. So while they have all this needs of financing redundant old structures, going back to this hybrid model that sooner or later the consumer will understand doesn't want. And at the same time, Tesla is putting all their free cash flow in supercomputers. So not only have they not caught up with the software, but let's not even talk about the next steps beyond the software.
Bingo.
So it's just, it's crazy. It's absolutely crazy what's happening.
Yeah, they're making capital investments for Unbox and that next leap in manufacturing and hardware. And then, as Alexander said, they're making these investments in compute, and all these other companies haven't even started. Nor is there really a plan. Again, a lot of them are depending on NVIDIA. A lot of them are depending on renting. There's no one that's kind of have that bold plan. There were some great charts in there, and I just subscribed actually to AJ earlier today. He's some of the best analysis on auto, and it's really sound, good information. And I find it to be very useful. The utilization story is what you're going to hear about in auto, especially if we go into kind of these pockets of recession, which may be occurring. We'll see. We got mixed information, by the way. Just to be clear, in August, days of supply came down dramatically in the U.S. It was over 100 days leaving July, and it dipped down to around 68, 70 days in August. Now, August was a 5-week month, and there may be some weirdness with that. So let's see how it fares in September. But we know credit's tightening up. We know the consumer's tightening up. We know it's more difficult for them to buy a vehicle. We know insurance is going up. We know this whole cost piece is going up. And so if you're not in a good position from a gross margin and operating margin perspective as an automaker, and you don't have the cash pile, you're at serious risk.
Two points. One was that Alexandra just made earlier on the open when you were discussing AI. I wrote down, just how much are the other manufacturers and other companies spending on AI? I think like following the money is like the most basic way to look at where the puck is going. So I second what Alexander said. And then I'll ask the stupid question on behalf of myself and the audience. If interest rates have impacted Tesla, aren't they also impacting these other manufacturers? Is there a hope for recovery, or because they have pivoted away from EVs, there's the math says that probably not?
Well, on financing, they have obviously a secret weapon with their financing arms. So they're diluting their loss on a much larger scale. When Tesla does a reduction to a financing at 0.99 or lowers the price, you have the impact immediately in the quarterly results, right? Tesla is not window dressing anything or throwing it over time. When GM gives you a car loan over 6 years at 0% or 1%, they stretch it over to 6 years because they have it in their own financing arm. So it's a completely different way of doing it.
Isn't it a different company, Alexandra, too?
It is then consolidated.
Yeah,
it's their own branch that they then consolidate in the financial results. So they can dilute it, they can stretch it over the 6 years. Tesla is doing none of that. Could do it, but decided not to do it, which is much fairer to the shareholder.
Yep.
Okay, what a power panel. Thank you guys so much. I mean, James, thank you for that list. That was a fantastic list. I got a couple more things to talk about, but we've been talking about competition failing. And so what they've been doing is they've been trying to redirect into hybrids. Even BYD is focusing that. Toyota, you mentioned that, Alexandra. It's all they ever going to do now is hybrids. Volvo admits defeat. Won't go fully electric by 2030. Plug-in hybrids and EVs, of course, a small amount of it will be EVs, will be 90 and 100% of sales. In the meantime, we are starting to see price parity. And so here's an example of Tesla against a BMW and Mercedes. A Tesla Model 3 Performance costs half as much as a BMW M3.
I think you need to show. I think you need to show that. Share the screen. Yeah.
I thought I was. Thanks. Yeah. Model 3 Performance half as much as BMW. Weighs less, smokes them in the real world, stoplight, quarter-mile run, and it only costs less maintain and fuel as well. Let's watch this video here. It's
flat foot our right pedal, just as we would if the light turned green. And I think this is going to be a very different race. Five Tesla, 5 Mercedes. Can we reel in the Mercedes? Maybe. Just as we go past the line, maybe. Right there.
Yeah, that's crazy.
And the reason I shared that with you is, we used to talk about one day battery electric vehicles would get to price parity with ICE. These two cars, okay, I used to be a big car fan, BMW driver, Merc driver for most of my life. And if you know the AMGs, they are rocket machines. They are optimized in every single way possible. I know you're a bit of a motorhead too, Xander. These cars are more than twice the price of the Tesla Model 3. They don't have all the luxury features the Model 3 has, and yet the Model 3 handles better and goes faster. What chance does Mercedes and BMW have with their sport car lineup anymore? It's not parity, it's half the price. And if you want extra features in those cars, you got to pay for them too. It's mind-blowing. I think this is a stunning time to see this happening.
And that's before autonomy.
Yeah. It drives itself and it has accident avoidance systems and everything. Also costs nothing to run, and you can get Tesla insurance as well. And it's a lot cheaper. If you go to an insurance carrier like Geico or Progressive, hey, how much can you insure my AMG for? It'll be like $6,000 a year, easy. So that's just, again, crazy.
And then hybrids. You have a thing here. Tell me what this is.
Yeah, so a lot of people are talking about, hybrids. If you don't do hybrids, you're going to die. But, if you look at from first principles, as you all do, and you think about this list, I tried to put together why they make no sense. You've got increased complexity and points of failure. You think about having car problems. Well, you could have a battery problem and an engine problem at the same time. Higher manufacturing costs. They're far more complex to build. Higher maintenance costs. Higher repair costs if they crash. You may have to replace a battery and an engine and a cooler and all that type of stuff. Very inefficient in all conditions. There was a cool study out of Europe, and it showed that a hybrid in winter or summer running heating or air conditioning absolutely performed terribly from economy because the engine was running full just to keep the car hot and cold, whereas Tesla doesn't have that problem. They're heavy and slow because there's more parts. Environmental impact is a joke. They say they are environmentally friendly. They are not. And they are no longer cheaper than BEVs. So this is, again, another case point that I can't see why a leadership team at a car company would actually invest in these things or make these things. And it's all good. That house of cards we spoke of earlier is going to come crashing down real fast.
Well, they're tricking the consumer, James, right? They're saying, hey, it's an electric car. All they did was added a tiny little battery to it and take advantage of the incentives and then sell it and then trick the consumer that it's an EV.
Yeah, as SMR says, a vibrator-sized battery. It's always very funny if whoever says that.
But James, I take a road trip twice a year and I have to pause and go to, and got to go to the bathroom, and I need to eat, and I have to charge my car. This surely this can't be worth the inconvenience.
Yeah, it's crazy. I like to meet somebody who can drive more than 350 miles without a potty break. That's the person I want to meet. So everybody needs to stop.
All right, great show, guys. So let's wrap it up and come back to this full circle. This was announced and confirmed by Tesla, saying that the Tesla shareholder, that the actual event on October 10th is actually happening. It is in LA. And so if you have shares, go to ir.tesla.com, register, because there's a lottery. And if you win, you get a chance to attend.
And I think we should say that even if people are already registered with Tesla AR and have already the SAY platform, they need to go back and register for this specific event. So people often tell me, oh, I'm registered. I've registered 10 months ago or whenever. No, you have registered. And this has nothing to do with what you register for voting shares. No. This is a completely other subject. So you have to register and verify with SAY or by sending them a portfolio of end of July shares that you are currently a shareholder, and you have to express that you're interested to come to the 1010 event. So it's really two things to do. The first one probably did already, and if you're ongoing on SAY, it automatically updates. If you're not automatically linked to SAY, you have to send them a new July statement so that they know you're currently still a shareholder. And you still have to register for your potential venue on the 1010 event.
And if you win, just invite me as your +1, and I will give you non-financial options advice.
Now, my question again is to everybody: are you coming even if you won't go on site, or are you not coming then?
Oh, I'm going to be coming because remember what we said at the very beginning. This is the most important event in a moment in Tesla's history.
Same.
I got to be there regardless.
Yeah. Same. I think this is the thing not to be missed no matter what.
Maybe we can all party the night before or something like that.
Oh, no more booze for you,
Herbert. You will not believe it. Herbert, I'm down 60 pounds now since you saw me last time.
What does that have to do with party?
No, I want to show off.
Okay.
Congratulations.
I will take the video of Alexandra.
What did
Show
I do
her
again?
Anyways, thank
Herbert's
you guys
always
so much.
looking for another party.
Right. There's something.
Let's forget about that last event.
we still have material, Xander. We still have material.
Collective material for one big reveal someday in the future.
Oh no. Yeah. Drop.
James, you said you might actually come as well. Hopefully you're there. But thank you again. You are amazing. Co-host of this panel here. Just so fantastic. I appreciate what you bring to the table. Thank you, Alexandra and Xander and Jeff. Powerhouse panel. Appreciate all of you. Thanks, everybody.
Thanks for the slides, James. Great job, Herbert. Thanks, team.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.